From euphoria to fear.
Fears about valuations in the AI trade weighing on tech stocks, all but one member of the Mag 7 down today.
Optimism to doubt.
Another day of tech underperformance on some concerns about AI growth.
Signs the market's turning on AI.
The last week, in terms of the shift from investors about how they think about AI and that overinvestment narrative really picking up steam.
Not just one headline, but 1,000 tiny cuts.
In September and October, debt issuance from just 3 companies was larger than all of tech debt issuance in the preceding 3 years.
Noted investor Michael Burry among the latest to weigh in, accusing some of the biggest tech companies of using aggressive accounting methods to pad their profits from the AI boom.
CoreWeave crumbling after last night's earnings report. Despite posting better than expected revenue, shares dropped 16% to 2-month lows today. Investors disappointed in the company's revenue guidance.
I'm Deirdre Bosa with the Tech Check Take. AI anxiety on the rise. The AI trade is still the market's favorite story, but it's starting to show cracks. Skeptics like Michael Burry, the original Big Short investor, getting louder. His warning is that the AI buildout is being treated like a one-time investment when it's really a recurring expense, a depreciation tsunami waiting to hit the balance sheets of companies that are fueling the boom. Another famed short seller, Jim Chanos, getting in on the action too, throwing cold water on Anthropic's latest $50 billion data center plans. Meanwhile, spending continues unabated from the mega caps to the AI startup giants, but now with a new layer of complexity, debt underpinning the next leg of the AI trade. The same way cheap money fueled the .com and the housing bubbles, the AI infrastructure boom is increasingly being financed not by venture capital and profits, but by loans, bonds, securitized debt.
Once you see tons of debt getting involved, debt financing, that's a different story. Everything's more risky. Everyone's more vulnerable.
And that's what makes this moment different. The easier initial gains from hype and multiple expansion, that may be behind us as investors start to weigh the greater risk and cost of keeping the boom alive. Bank of America put out a note that tries to gauge the evolving AI trade through watch out and get out signals for past booms and bubbles. Watch out means that investors should be cautious. Get out means they should sell. It concludes that there are indeed plenty of watch outs in the AI trade right now, like market cap concentration in the Mag 7 and AI, frothy valuations, global and retail buy-in. But they say the red flag get out tells they aren't yet flashing. Interest rates, the analysts say, are not rising and yields aren't spiking, meaning that the big shorts like Michael Burry must bide their time. Airbnb CEO Brian Chesky put it another way. He said, we're not quite yet in the mania phase of the AI hype cycle.
I think we need to be careful about excitement turning into euphoria, turning into mania. So I think if it's excitement, we should be feeling good.
Where are we in that? At the moment?
We're leaving excitement. We might have left excitement.
AMD CEO Lisa Su, meanwhile, she says that from where she sits, selling the picks and shovels of the trade, demand is accelerating. People are starting to get real productivity out of the AI use cases.
The early enterprise usage was a little bit slow. I mean, people were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, we've seen every one of our largest customers say, we can see the inflection point now, Lisa. Like, we can see, demand is accelerating because people are now starting to get real productivity out of the AI use cases.
I sat down with 2 AI founders for their take. The first is Amjad Masad, CEO and founder of Replit. He's been at the forefront of vibe coding, or AI-first coding, a trend that has exploded over the last year or so. He admits that the hype is cooled, but there's still plenty of growth, and it's looking at free cash flow and profitability next year. He also had a take on going public that runs counter to almost every other AI startup founder I talk to these days. He actually wants to be a public company and hasn't been scared off by the hamster wheel of quarterly earnings that other CEOs and founders seem to be resisting. Amjad, it's great to chat with you again at the Cerebral Valley event. You've been coming since the beginning, right?
Yes, I remember when it was a room on a nondescript building in SF, but now this is awesome.
I know hundreds of people, great founders like yourselves. It's really turned into something which also says a lot about where we are with AI, right?
Yes.
And where we are in public markets, which we pay a lot of attention to, is there seems to be some skepticism creeping in or anxiety over the return on investment and whether the costs are outrunning revenue. Replit, you guys have had actually quite a bit of success. You've seen revenue essentially explode. What are you seeing in terms of adoption? What would you say to sort of investors that are worried about this bubble forming?
I mean, if you look at the AI coding space, like 2 years ago, or maybe even a year ago, Copilot was the only game in town. They were like at 500 million ARR and revenue. If you add up all our companies in the vibe coding space and otherwise, it is maybe like 5 billion ARR. So like there's a 10x increase in revenue in this category. You go from one player to like 10 plus players. We're all making money. And there's criticism about being an app player. Can you actually have margins? We do have margins. We're on our way to being profitable next year. And so, from our point of view, there's tremendous value. Enterprises are waking up to the value of vibe coding. It's not just about making developers more productive. It really fundamentally changes how companies work. So at least in our world, I mean, it's obvious that there's tremendous value.
And adoption, I mean, give me a little bit of color on what you've seen over the last few years. And I think it's really important that you said that you're looking to profitability next year. Is that right?
Yeah.
Cash flow also?
Yes. Yeah.
So talk about sort of that path and how you've seen it pick up, and have there been any stops and starts along the way? Are you seeing adoption just as strong as ever right now?
So there was, early on in the year, there was like the vibe coding hype market where everyone sort of heard about vibe coding, everyone wanted to go try it. The tools were not as good as they are today, so I think it burnt a lot of people down. So there's a bit of a vibe coding, I would say, kind of hype slowdown, and a lot of companies that were making money are not making as much money anymore. So a lot of the startups were publishing their ARR every week. Now they're not. We're still making a lot of money, and partly is because Replit is really made for the professional. We've done the work around security and around reliability. We're in finance companies, healthcare companies. We're in governments now. We have deals with the government of Saudi Arabia, deals with the government of Jordan, and other places in the world. We have deals with big banks in Japan, and so we did the work to go into the enterprise, where I think most of the value is there today. And so while there is maybe consumer skepticism, we're in this sort of Gartner hype cycle where there's like a little bit of skepticism, the tools are getting a lot better. So Agent 3 is our third version of the agent. We, 10 months into our journey with building software development agents that took the company from 3 million ARR to 250 million ARR, Agent 3 is a lot more reliable. It makes the app, but also tests it. It starts the browser, tests the app, and it can run autonomously for 200 minutes or more.
I mean, the idea that Replit, which I've always thought of as sort of like the consumer answer to vibe coding, the fact that you were in the Middle East over the last 2 weeks, you're signing deals with the Saudi Arabia government. What does that say about AI at large? I mean, not just vibe coding, right, which kind of feels like more niche, but if the government is looking to AI first coding, what does that tell you about where we are in the adoption cycle?
Well, I think we're at a point, I mean, that's what usually happens. There's some like bottom-up excitement, from consumers, prosumers, but then people bring it to work. And that's exactly what's happening with Replit. We're not, like all deals are inbound. Humane, the national AI company in Saudi Arabia, already had Replit usage. And people at their team, even non-developers, were building applications to manage their business. And so a lot of these deals end up closing very quickly because people are already using the product. So people brought it to work, and now they're seeing tremendous success from it. We have one Fortune 5000 company that added $100 million in top-line revenue because someone in that company built an application that was tremendously valuable for the business. And so the value is clear, I think clearer than ever.
And the adoption is picking up. When you look to next year, what does that look like? Is the pace going to slow down? How are you on the cost side as well? We talk a lot about these bottlenecks in compute. Obviously, we have, it feels like, infrastructure announcements almost daily. How does that look? Do you have the compute power necessary?
Well, we use mostly commercial models. We use all the commercial models, Anthropic as being our biggest provider, then Gemini, and then OpenAI. And we would like to see token prices go down. They're not going down as much as they used to go down. And we want to consume more tokens because the more we consume, the better products we create for people. But we didn't play the game. A lot of other people in this space are kind of trying to compete on price. Because we know the value we create is insane. Like, even entrepreneurs, they tell us, a doctor in the UK wanted to build this healthcare app, he was quoted £100,000 to build that app. He built it for £500. And so
did it work? Is it tested? That's one of the complaints.
It's a startup.
People have.
They raised money on it. The other day, another entrepreneur, finance guy, got $500,000 worth of annual deals before he quit his job at a large financial firm. And so entrepreneurs are building startups like never
They're holding
before.
up. I mean, I feel like that's one of the criticisms that I've heard of vibe coding is that, in theory it's great, but maybe it's too good to be true.
It's true of all of our competitors, but not of us.
Not of us? Okay.
Well, the thing is, we have the benefit of being around for almost 10 years now.
Right.
We built a very solid platform, very scalable platform that has nothing to do with AI. It's the underlying compute primitives, the storage, the development environment, the deployment environment, the security primitives around that. All of that is really important. We have a head start there.
Right. So along this issue of vibe coding, kind of getting maybe, I like how you framed it, coming down from the hype cycle. There was this clip of Alexander Wang at Meta saying that 13-year-olds should spend all of their time vibe coding. It got a lot of blowback. Why do you think that is?
Well, I think there's a lot of engineers that are really skeptical of the concept of vibe coding because they put their life force into learning the craft. And look, I think their jobs are safe. There's always a place for specialists. Actually, I'm a big student of history of computer science. If you go back 75 years at the invention of the compiler, Grace Hopper invented the compiler. You went from programming in machine code to actually programming in English. And she had similar blowback at the time. She was like, I want more people to be able to program. And the machine code programmers were like, no, this doesn't work. You're writing in English, you should be writing in machine code. So every time there's a new innovation in programming, there's got to be blowback.
At a bigger level, is that what's happening with AI and Wall Street skepticism? Do you think it's justified?
I think there is some justification to it. I think it is harder. It's been hard for enterprises to adopt AI and see a lot of value out of it. But I think they're adopting the wrong AI. I think AI coding, something like Replit, will be ROI positive immediately in the first week or two of people doing trials with us. But if you add a chatbot, chatbots are not going to do all that much for you. So you think about agents, software development agents, but also agents in general. This is where we get to the actual value in automation.
Right, are you saying it's sort of more the app layer of this? What do you build on top of the AI we already have?
Yeah, I will say a lot of enterprises try to integrate chatbots into their workflow, right. And chatbots are just limited in their utility. What I think they should be thinking about is in terms of automating work, automating labor. That's where most of the value is. This is where they see. And the other thing is this idea of democratization of innovation. Previously, companies were structured in a way where only the engineers could innovate and could create something new. And now with Replit, we're seeing that the person that's talking to the customer is able to spin up a Replit app really quickly to show the customer value. The product manager, the designer is not dependent on the engineer, the salesperson, the operations person. So you decentralize innovation inside the organization.
How far away are we from enterprises like vibe coding, what they need specific to them, replacing a Salesforce or Workday? That sort of the existential question for SaaS companies.
We're seeing that at the SMB. So companies with like 500 or less employees, we have a story on our site where there's a real estate company, I think they have 100 plus employees, replaced Salesforce with a vibe-coded CRM that they built specifically for them.
And again, it stands the test of time, whatever that is, a few months or weeks?
Yeah, I mean, look, I think this is where our focus is going, is how do you verify the software?
Right.
So when you use Replit today, not only writing the code like most tools do, we actually spend a lot more time verifying the code, going into actually spinning up an agent that uses the app, spinning up a security testing agent, spinning up a verifier agent. And so, I think we're still at a time where, yes, you still need some kind of human in the loop before you put something in production at a Fortune 500 company, but we'll get there by next year.
Wow. Okay, for your business, Replit, you said next year, profitability and free cash flow. How does that change how you run the business, how you hire people, your sort of strategy? We haven't spent even the round we raised in 2023. And one thing about Replit is we know we add a lot of value, our prices are high,
And again, we save you orders of magnitude of money. And so we can even charge higher of a price. We're not for now, but I think it's just like tools like ours create tremendous amount of value for the enterprise. In terms of profitability, that's not really the focus. It's happening naturally just because we're growing, the margins are improving, we get more adoption from enterprises and things like that where the margins are better than consumer. So yeah, next year, 1 billion seems like a good target.
You'll be able to get that revenue.
We broke every target we had this year.
Right.
Like this year, we had a 100 million target, then 150, then 250. We broke all of those, and so I'll say a good start is $1 billion ARR.
Okay. As you sign these bigger customers, as you're traveling around the world doing deals, how do you think about going public? This is something that many startups in the AI space sort of aren't looking to anytime soon. That's always what we hear. You have a small group like the CoreWeaves and the NeoClouds going public. How do you think about it as a vibe code player?
I went around Silicon Valley and asked companies that are a lot bigger than us that are still private, why are you private? I've never gotten a good answer. It's mostly, laziness around, there's chores and I need to talk to. But I mean, we as entrepreneurs, we spend a lot of our time talking to our board and existing investors. There just doesn't seem to be a good answer why companies are not going public, and that makes it more attractive to me. So we're looking into it.
Are you talking to bankers?
Maybe.
Okay.
Do you have any good bankers?
I can make a few introductions. Okay. A few people come to mind. Interesting. Would that be a 2026 thing? Possibly?
We haven't really, it'll probably take a little longer. The company's still small. Like, we're just over 100 people. And so we need to mature and grow bigger. 2026 is definitely a big target in terms of the company maturity.
Right. Okay, let me ask you broadly about the AI space as well. There's been a lot of movements at the very big companies, like a Meta, for example. We saw Yann LeCun, or reports that he will be leaving. They've got a bunch of product people running now, like Alexander Wang and Nat Friedman, and it feels like the researchers are sort of leaving Meta. Where does that leave them? Especially, it's a good question to ask you because, your vibe coding, what you do, makes it easier for product people to create things, but they're in the model building business.
Well, I think what's happening at Meta is that the older crop of researchers are leaving. So FAIR, what used to be called Facebook AI Research Group, is different than their large language model group, their super intelligence group. So I don't think I don't think all the researchers are leaving. It's more researchers that were doing more basic AI research. And I think what the folks at Meta realize is we need to bet really big on LLMs. That's what everyone's doing. But honestly, I think it was kind of cool that they were still doing basic AI research because not a lot of companies are doing that. But I think they realize they're way behind on just LLM scaling. And LLM scaling is kind of like a brute force thing. Like, there's quite a bit of innovation behind it, but a lot of it is about bigness, big data centers, big data providers, all of that stuff. So I think that's what they have to do.
And huge amounts of spending. The street is getting a little bit nervous, skittish about the amounts of money that Meta's spending. You can see this sort of just in the stock price over the last 3 months, massively underperforming the other AI players. What's the tone in Silicon Valley about whether Zuckerberg can pull this off?
I'm not sure what their monetization strategy is. Like, maybe it benefits ads a lot. I could see that. But consumer AI, I think there's something about it that's not good. Like, it's the idea that people are just going to sit around and scroll AI slop generated feed is just not a good thing to build. I don't think it's a good long-term business plan. Increasingly, the feeds in social media are becoming a lot of AI slop, and so I'm quite skeptical that there's actually a really good consumer business outside of that ChatGPT sort of world.
Okay, last question for you. There's also been a lot of movement in the venture capital world. You've raised money through different VCs over the years. You just raised a round recently. You said you haven't spent any of it yet. Big shakeup at Sequoia over the last week or so. Any insight into what happened there?
From our vantage point, I think Sequoia seemed to have missed the vibe coding space. I mean, we've talked to them. There are people there that are really passionate about it, like David Kahn and Andrew Reid and others. But maybe I'm just, speculating here. Maybe the leadership there was skeptical. But certainly true that they missed this category that's quite amazing.
What was your experience with them? I mean, you must have talked to everyone at some point when you're raising money.
Yeah, I mean, the guys that I mentioned are just like really amazing. David has been David invested in Replit AdCo too. Before he went to Sequoia, and so there are people there that really believe in the vision of 1 billion developers, like we talk about it. That's our mission, to create 1 billion people creating software. Those deals have not gone anywhere, and maybe there are skepticism.
Not just vibe coding, but it seems like they've missed some other big AI themes. Okay, last question, since this is going on CNBC TV side, what's your message to investors that are worried about the AI trade right now? Any sort of takeaway?
I really think that AI for work just happened this year. Like, this is the start of agents. Agents are, and people say agents for all sorts of things. Not everything's an agent. Agents are basically things that automate work. And that's tremendously valuable for every kind of company. It'll increase efficiency, productivity, innovation across the board. So I would watch this space. I would watch the agent space. I would probably pour the money into where that is going. Because chatbots turned out to be very useful for consumer. They're not entirely useful for the enterprise.
Not as monetizable.
Yes.
Okay, Amjad, always great to talk to you. Thank you so much.
Pleasure.
Good luck with your panel today.
Thank you.
The second founder I sat down with is Navrina Singh. She's founder and CEO of Credo AI, a startup that's tackling governance in AI. At the risk of offending her, I asked her if governance has become a dirty word in AI amid the pursuit of progress at all costs. She argues that rather than be a brake on innovation, governance is actually the accelerator. And that's why she says we are far from bubble territory. Navrina, it is so great to talk to you here at the Cerebral Valley event. How long have you been coming, by the way? Is this your first one?
This is my first one, but an avid reader of Newcomer.
Oh, great.
And excited to see so many AI startups here and companies.
It's kind of an indication. The first one was only 3 years ago in this small room, and I think I've been coming since the second one, but it's just really a sign of how much enthusiasm there is around AI. You operate in a very interesting space, governance, which among some people building AI is almost a dirty word. Is that offensive for me to say to you?
No, we are used to it, and let me just break that down for you. I think governance is the only way that you can get the ROI on artificial intelligence, and also is the only way that you as a consumer or as an enterprise can build trust with this technology. So even though it might be a dirty word, it is actually a very core, critical component of enterprise priorities as we move into 2026.
And I think why it gets a bad rap is that there's this idea that maybe governance and checking all the boxes means that you have to move slower. But Credo, explain how Credo actually allows you to move faster by keeping an eye on governance.
So Credo AI, we've started the company almost 5.5 years ago. Our big focus has been, how do you ensure that you have the oversight and accountability of this technology, everything from generative AI to agentic AI? And our customers are some of the largest global 2,000 companies, from MasterCard to PepsiCo to Cisco and others. And what we are finding is governance really is about core 3 things. One, can you understand the risk within this technology? And as you can imagine, the risks are not decreasing, it's just elevating. Everything from accuracy to cybersecurity to privacy. The second is, can you actually mitigate those risks at large? And then the third is, can you actually get to compliance, not just with regulations and standards, but with company policies? And this is where governance actually becomes an enabler of getting the ROI from this artificial intelligence technology, because you can build trust with consumers, you can sell more AI, you can sell it faster,
right,
and you can actually do a lot of more efficiency and productivity within your organization.
I was talking to an engineer at a mega cap who told me he sort of hates having to go through the lawyers because they slow everything down. How does Credo make that sort of easier, faster, more efficient?
Yeah, so a couple of things. I think maybe again, if you just step back and think about how we build software, governance is pretty much like building software. You have to go through the processes of going from 0 to 1, productionizing it, testing it. And basically what governance is doing is it's not slowing you down, it's actually putting in place the right practices you need to make sure that these systems work. So the way Credo AI accelerates this is we use a lot of artificial intelligence to govern AI, but also we have codified some of the best practices in the world so that this gap between what is a pilot in AI versus what the consumers demand in production, that gap is bridged very accurately with scientific measures.
I would think too, in the long run, having these proper governance systems in place saves you headaches if something does go wrong. What are you seeing at Credo in terms of adoption? We talk often about what public market investors are thinking about the AI trade, and there's been, some worries, maybe some cracks recently about return on investment, about the huge amount of spending on infrastructure. What are you seeing at Credo?
So at Credo AI, first and foremost, our growth, we've been tripling year over year, which has been really exciting. That just means that businesses are recognizing that it's not just about regulatory compliance, it's about operational efficiency, it's about financial impact, especially with artificial intelligence. So all our customers and clients are actually adopting, one, third-party AI much more aggressively, but two, they are embedding a lot of AI in the systems that they're delivering to customers. A recent RAMP survey showed that 44% of US companies are now buying AI tools compared to 5% back in 2023. I mean, that's huge, right? So I, as an enterprise, am using more AI, building more AI, selling more AI, and all that is possible with good oversight.
And certainly that's been the story over the last few years, but almost like FOMO. Like companies say they need to get all of these tools, they're spending big, but in reality, I think there's some questions over whether they're all that useful, whether the implementation is all that smooth. What are you seeing on that front?
Artificial intelligence is going to be one of the biggest growth drivers of our future. And we are seeing this firsthand in the businesses that we are operating with. Everything from coding efficiency to testing efficiency to the benefits we are seeing in customer support, the value and the growth is real. The key question is actually, can you build that trusted, reliable, secure system? And that's where Credo AI's governance becomes critical.
And is it working? You're not seeing any pullback?
No, we are not. We are actually seeing all our customers doubling down on AI, but also doubling down on AI governance because they know that both of these go hand in hand to build trust with this technology.
So Credo's got growth. You said revenue's tripling every year. What about profitability margins?
Yeah, so I would say that we are, still early in our journey on profitability side, but in terms of margins, we are seeing very healthy margins across our business. But even what's more exciting is the companies are actually building not only the tooling, but they're also upskilling using Credo AI's forward deployed AI governance experts. They're upskilling their AI maturity as well as their AI governance maturity. And so we are just adding new revenue streams to our business, which has been really exciting.
Now, you guys are growing quickly. There is this question, I mentioned it, about how much the mega caps are spending. And that's really just how much, as a country, we're spending on infrastructure, right? And GPUs. And we're taking companies and AI taking on more debt. What do you say to those that are worried about a bubble here?
It's so interesting. This is maybe the 5th time I'm getting asked this question this week. I don't think we are in a bubble. I really believe this is the new reality of the world that we are living in. As we know, AI is going to be, and already is, a biggest growth driver for businesses. So it just makes sense that there has to be more investment, not only on the capability side, governance side, but energy and infrastructure side as well. And so Credo AI's focus is on that governance market. We are like the trusted OS for this AI stack. So even though a small component of this stack, we are making that bubble not be a bubble, but be a new reality.
When you say there's not a bubble, though, do you think that hype will come down? I mean, I think most people believe that AI is going to, maybe it's like the internet, right? There's going to be some air that comes out of it, but it's going to still grow. Do you think that maybe that is possibly on the horizon?
I don't think so. I think this is a new world that we are living in. We are actually seeing very considerable gains, everything from my team using coding agents to the companies we are serving seeing benefit from AI governance. So I would say this is a new reality. I don't see, it's not hype. I think this is the new way we are going to be doing business.
Talk about governance specifically, what you guys are solving for. Is it things like hallucinations and bias? Is it the protection of information?
Yeah, so the best way to think about AI governance and what we are solving for is everything that an enterprise or a business cares about. They care about regulatory risk, they care about financial risk, operational risk. And as you think about how that manifests, it manifests everything from hallucination challenges to making sure IP infringement doesn't happen, to making sure toxicity thresholds are managed. So we are looking across the entire AI lifecycle and very scientifically measuring every parameter from the privacy constraints all the way to hallucination reliability constraints and mapping that to business objectives.
And are you using models to do that yourself?
So two ways. As you can imagine, using AI to govern AI is a pretty big problem set. How do we prove trust within the AI we are using? So we have both a rule-based governance mechanism, but also an AI-based governance mechanism. So we do right now depend on some of the foundation model providers for their models to help with governance.
Who are you using?
Yeah, we use a plethora of them, everyone from OpenAI to Anthropic. We also look at a lot of open source models.
The Chinese open source models?
We are not using Chinese open source models, but as you can imagine, we are helping companies determine is the Chinese open source models, especially available on Azure and AWS, worth their use. But right now, we actually don't allow Chinese open source models to be used.
Which ones do you use?
So we've looked at everyone from Quinn to Kimi and others, but as you can imagine, this is still an evolving space. We are very careful about the use of Chinese models.
What about the enterprises that you're working with? Are they adopting Chinese models? I mean, especially if you take out the risk by basically just putting it on their own servers?
I would say no. So obviously there's a lot of excitement in the open source community around the capabilities that these Chinese models are bringing. China has started to lead a lot in open source. I mean, as US really need to win this game. Having said that, we are seeing our enterprises are very cautious in terms of adoption of open source models. They are experimenting a lot with it, but they are not putting it in production.
Right, interesting. Okay, great answer. Well, thank you so much for chatting with us today. Excited to track your progress.
Thank you so much for having me.